Hello, this is Seewing Yee. I'm going to talk about my own personal portfolio acquisitions. Yep, it's going to be very exciting. It is never a wrong time to buy rental properties. Swiss Army knife. I'm going to go over my own portfolio that has occurred within the past 12 months, giving the challenging real estate environment, and I'm going to show you there's never a wrong time to buy. I'm going to dive deep into two of the rented properties which I purchased, and I'm going to go over some amazing details and to share with you how I have converted these rentals into a Swiss Army knife. Multiple benefits associated with this. All right, so without further ado, let's dive in. What housing crash? What correction? It does not matter. I practice what I preach. This is a long-term buy and hold investment methodology, which I've been doing it for almost 30 years, and I have consulted hundreds of real estate investors to guide them through the process of buying and scaling turnkey investment properties to achieve their generational wealth. So, does not matter about a crash, correction, wherever all the doom and gloom information is out there. If you do dollar cost averaging, if you buy consistently, buy for long term, then you'll be fine. That's all I have to say. All right. So, what is the property I purchased? I'm going to talk about two properties. One is a single family home, new construction, 3-bedroom, 2-bath in Central Florida. Ocala, if you wish to know, I bought this one as you can see, in April of 2022. Right before the skyrocketing of the mortgage interest rate from 4.5% mortgage rate last April. Then in the middle of last year, June, sometimes the mortgage rate started to skyrocket from 4.5% to 5% to the 7% range in around October of 2022. But guess what? It does not matter. Okay. For investor, when you buy rental property, it's not about the mortgage rate, interest rate. It's about positive cash flow. So the property I bought, first one is single family home, $229K. And then I just closed escrow a month ago. And now that property is valued at $282,000. Just goes to show you, if you buy in the right submarket, if you buy in the right location, you can still make money, you can still achieve appreciation regardless of the national headlines, prices decreasing here and there. It does not matter. Okay, so anyway, the fourplex also, I was under contract. I reserved a lot in San Antonio on the fourplex last May of 2022, exactly 1 year ago, and I locked in the price before the dirt was poured in, the foundation was poured, and I locked in the contract at $775,000. This fourplex in San Antonio, Texas. Now, in May of 2023, the estimated value of this fourplex is at $1.1 million. Let's crunch the numbers. It is a growth of $325,000 in equity over the past year as this building was being constructed from grounds up. So in a few months, I will close escrow on this fourplex multi-unit, and I will share with you some additional numbers. So essentially, it's 40% equity growth. So I didn't plan on it. It just happened because when you buy properties on a consistent basis, some of the property it's going to be a surprise. It's going to be a bonus. So I did not plan for this sudden appreciation. It just happened because when you do not time the market, when you just consistently buy dollar cost average, regardless of the economic conditions, as long as you buy with a good foundation, as long as you buy with cash flow at 25% down payment and invest for the long term, you'll be fine. All right, so let's go on. So this property is a single family home, like I said, very nice cookie cutter home in a great location in Ocala, Central Florida. Again, I bought for $229 a year ago. Now closed escrow a month ago. The appraised value is $282. It's a walk-in equity. So, and I'm in the process of getting a renter in that it rents for projected at $1,850 monthly. I put 25% down payment at 6% mortgage rate. At the end of the day, I'm receiving approximately monthly net cash flow of $379. The rent to value ratio, capitalization rate, cash and cash return, total ROI are all very attractive numbers. It beats the benchmark for real estate investors. These are a very good purchase and in an appreciating market, Central Florida. Getting back to this fourplex is going to finish constructing in a couple of months, in a few months, going through a lot of delays. It took more than a year for the house to be finished. And I locked in the price last May on a lot reservation at $775K. At that time, I have no idea that this property can appreciate so much during the construction phase because I bought it at phase 1. In the Central Texas, San Antonio market, the new construction duplex or fourplex in a good areas in San Antonio has been appreciating amazingly throughout 2022. I'm very happy, but I'm going to invest for the long term. I'm not going to flip this property, by the way. Okay. I'm going to cash out the equity in about a year and buy leverage to buy multiple rental properties in about a year from now or less. I'm very happy about this property. Sometimes I buy for cash flow and all that, but appreciation is just a bonus. I mean, I'm laughing my way to the bank. During the construction phase, increased amazingly. It's just shocking. I put 25% down payment at a little bit less than 6% mortgage rate because I pay down the points. I'm going to pay down the points. I'm going to pay 4 points to reduce the mortgage rate. So the numbers are the following. Right now, per unit, it's like $1,850 projected rent. But I believe by the end of this year, the per unit per door, the rent could be around $2,000. So total $8,000 monthly rent on a 4 unit, 4 doors on this fourplex. If you look at the rent to value ratio, it's like 1%, which is amazing in this market. Capitalization rate is very high. Cash and cash return, double digit. Total ROI, 37% on the first year only. And based on the property tax is 1.5% of the purchase price, which is very reasonable, minus the monthly insurance, property management fee, and the vacancy rate of 3%, property management fee of 8%, and appreciation annually on an annual basis at a mere 5%. So at the end of the day, and mortgage, of course, at the 5.75% on the loan, which is $33.92. At the end of the day, at 25% down payment, my projected monthly net cash flow, get this, is $2,478. Okay, just the first year. At the end of the first year, my monthly net cash flow, 12 months projection for this coming year is almost 30 grand. I'm talking about net monthly annual cash flow at 30 grand. That equals to a lot of people's paycheck. This is just the tip of the iceberg. Why? Let me share you with you why. So these numbers are amazing, right? Very good cash flow with this very fast moving amazing market in Central Texas, in San Antonio, population growth, job growth, the whole 9 yards. Right, let's continue. Okay, and again, I bought it for $775K. I got a great deal because I bought it in the phase 1 of this new construction, and the neighboring comp just recently on a very similar floor plan, few miles away on another builder. This property is listed for sale at almost $1.1 million. It's just amazing equity. It's just amazing. So out of the 4 unit later, maybe in about 6 months or so, I'm going to test this market. I'm going to apply one of the 4 units to go through a medium-term rental scenario. Medium-term rental. If I convert that one rental into medium-term rental, my projected monthly gross rent should be around 50% higher than the annual gross rent. This means if my monthly rent is $2,000 on a long-term rental, annual lease, if I convert one of the rental to a mid-term rental, I expect to charge 50% higher rent. So instead of $2 grand, I'm potentially charging $3,000 monthly gross rent to convert one of the rental into a mid-term rental. I could rent it to mid-term rental is more than 30 days, less than 365 days. There are no restrictions in San Antonio on the local ordinance or anything like that. And the rental pool is massive. Traveling nurses, healthcare professionals, digital nomads. So this space, this midterm rental is exploding. This is a new asset class. My fourplex in San Antonio. So my goal is it's a Swiss Army knife. Okay. I can even do a short-term rental if I want to. So that's in the future. So that 4 unit, I have so much flexibility for the next few years. So I would do more research because in the neighborhood of this fourplex, there are several large hospitals very close by. Well, I'm talking very huge hospitals here in San Antonio, and there are several colleges and universities, and it's an amazing location, very robust marketplace. So I'm not going to go to that. There's too much to talk about on this video. But anyway, you can read about it. And then something people need to know is a long-term investment. There are so many different ways to make money on a rental. If you look at the projection or the 10-year projection, if you need to obtain this software, I use property tracking software. So if you project at 5% rental increase, which is very reasonable on a year-over-year, so at the current rental projection on an annual basis, your cash flow could increase approximately 5% projection. So this is just a projection. No one knows the future. As you can see, year 1 to year 10, we have seen systematic growth, rental increases. It will provide myself with a great potential cash flow on a consistent basis. You crunch the numbers, taxes, insurance, all that stuff, maintenance. So just keep them in mind. Let me show you another chart right here. And then your mortgage payment, right? All the tenants gonna systematically pay down your debt. So when you increase the equity of your property and the tenants gonna pay down the debt, the loan to value, the LTV will continue to widen, give you just systematic equity increases, even if the property does not appreciate. So when I add on the projected 5% annual appreciation growth on top of the principal debt paid down by the tenants, and all that, so as you can see, the numbers will be mind-boggling on a year-over-year basis. So you have to think long-term. The first year, to some people, the first year projection may not achieve that much cash flow, but second, third, fourth, and fifth year, you will begin to see some mass accumulation of multiple layers of financial benefits. So you look at the market value. See the market value starting point at 1.1, second year at 1.2, third year 1.27, sixth year 1.5 million. It only a 5% appreciation growth, very historically proven. So at the year 10, that 1.1 million property could be 1.7, could be 1.8. Almost double in value, just like that. And the loan balance keep on increasing. As I mentioned before, then you have net equity. You can do a lot with this equity. You see the loan to value ratio. So each year, your loan to value ratio, your LTV continue to decrease, therefore allowing you a whole bunch of equity for potential to do cash out refinance at the 4th, 5th, and 6th year. So I can use the cash out refinance equity to buy multiple properties to leverage my portfolio and scale it, continue to do so. Okay, and if I were to sell this property at any given time, this software allowed me to look at the equity position as a starting point minus closing costs, and then if I want to sell, I can pocket a whole bunch of money, or I can do 1031, have deferred exchange. It also show you any kind of property, especially this fourplex, we have so much flexibility, is really, what you call it, is an amazing opportunity. It's a Swiss Army knife. It's a Swiss Army knife of all Swiss Army knives. I don't know how else to put it. And you can see every single year, your ROI is like a 10x. Your return on investment, the first couple of years is 16%. Third year, 43%, the ROI continue to grow exponentially, right? Because if you capture the annual cash flow, when you capture the consistent equity growth and appreciation and the loan balance reduction and tax benefit, this REIT ROI will be triple digit in a year 6, 7, 8, as you can see, right? So this is amazing numbers. So tax benefit. Okay. Let's talk about tax benefit. Okay. I'm not a tax advisor, but everybody's situation is different. It just so happens that I'm a real estate professional. Not only I'm a real estate licensed broker in California, but I have the ability to do married filing jointly, where my non-working spouse, which is my wife, is the real estate professional. And anyway, nevertheless, we qualify to become a real estate professional. As a result, we could achieve unlimited depreciation benefits to offset my active income. Normally, I'm not going to get into it too much, but normally the depreciation, the paper loss, the passive losses can only offset against passive income. So that's somewhat of a limitation to most people, but we become a real estate professional in a tax qualification kind of way. Of course, we have to go through the material participation, 750 hours per year, those kind of things. Not many people can qualify for the real estate professional's tax status, but consult your tax advisor. Some of you are able to do that. If you marry filing jointly, if you can have a non-working spouse or a part-time spouse to become a real estate pro, and if the working spouse have a very high income and you're willing to buy multiple properties, you can offset all your depreciation, whatever it is, against the active income. Is that amazing? So because I'm a real estate professional, this coming year, I have the ability to apply the cost segregation rule, the bonus depreciation. Instead of depreciating this fourplex and my other properties in my portfolio at 27 and a half years or 31 years or whatever on annual basis, which is fine, but I can do a cost segregation. I could do a cost segregation study. I could obtain the 10-year depreciation on a roof or whatever, 5-year depreciation, accelerated depreciation on a boiler, electrical system, or foundation, whatever, 3-year depreciation on other items inside the house. I can accelerate all kind of depreciation. And of course, being a real estate professional, Section 469 of the IRS code and all that. At the end of the day, I'll just give you the numbers. In my unique situation, I was able to come up with around $38,000 of cost segregation write-off in one on this property, on this fourplex, plus the $75,000 annual depreciation deductions on all my other rental properties existing. So potentially, I could write off a total $38K, add the $75,000 depreciation for my other rentals, equals around $113,000 depreciation. Again, because I qualified as a real estate professional under the rules of the IRS law, I could offset this paper depreciation against my active income. So therefore, if anyone in the 31 and 37% federal tax bracket, and in California, maximum state tax benefit is 9.3, we talk like 40% taxes, federal and state for California residents total. Imagine someone make 300 grand or 250 or 300 grand, and then you can offset everything, 113,000. So you wind up paying maybe 5% tax on a ordinary tax bracket, or even zero. I don't know. Okay. So just going to show you the tax benefit in my situation is much more significant because I'm able to qualify under this special rule. So this is amazing, right? Not only I'm getting multiple ways to make money, right? Rental property is history's most powerful and proven multi-dimensional real estate asset class. I can't even say it. It's the world's greatest wealth building. As I said, there's more than one way to make money in real estate. It's not all about cash flow. Cash flow you will get, albeit not very high, but like I said, because of inflation, because of rental increases, your cash flow will increase over time. That's the key. Okay. And tax benefit, I'm getting so much benefit, appreciation, and the power of the 30-year fixed rate mortgage by leveraging. So additional benefits, owning a rental property, as you can see right here. I'm not going to go over everything. You can convert. I have the ability to convert this fourplex, this brick location to midterm rental. Time will tell how many of the units I can convert to Airbnb or midterm rental. I had to play it by ear. but it's a very fascinating project for me to do. Something I enjoyed. It's very exciting for how I can elevate, how I can scale, how I could just the cash flow associated with it. There's so many ways to skin a cat. Not only a fourplex, but a single family home, your duplex, whatever. If you own any kind of income property in any location in the United States, you have the ability to achieve what I call the Swiss Army knife. As you can see, I can convert into a certain time in the future. I can convert all my rental property, not just on these fourplex, into a vacation home. I can do a 1031 tax-free exchange. I can do a cash out refinance. I can recharacterize my rental into a primary home. I could rehab the house, add value to it, add a bedroom, bathroom, whatever, value add to the property. So many different ways to recharacterize any income property. Is truly a Swiss Army knife. And finally, in this challenging economic environment, the great Warren Buffett says, be fearful when others are greedy and be greedy when others are fearful. Right now, a lot of people are very fearful, so be greedy, be a capitalist, okay, and create wealth in an exponential way. Again, the takeaway for this presentation is that everybody's real estate goals are different. Everybody's real estate portfolio is different. Mine could be different than yours, but I'm just using my own unique situation. I practice what I preach, and I do not time the market. I consistently buy. I buy in a good area. I buy with a cash flow in mind. That's my fundamental blueprint. The appreciation happened. That's great. I spread my risk in different markets. I have invested in many markets throughout my career. And right now, I just happen to love Florida and Texas for many obvious reasons. So this is just a tip of the iceberg. This is a way I'm sharing with you so many different ways to make money, multiple ways to make money on each and every income property that you own. So therefore, to make this happen, all of you out there, especially many of you are still staying on the sidelines, get off the sideline and take action and overcome fear and do the strategies. Not all of my strategies make sense to every one of you because everybody's goals are different. At the end of the day, it's all about execution, taking action, and focus and invest for the long term, and just ignore all the chatter, ignore all the negative headlines that we subject ourselves to every single day. Ignore the negative headlines, focus on your personal goals, take action, show discipline, dedication, commitment, and do the work, create your buy box, invest for long term, and don't fall into the trap of this doom and gloom scenarios out there. Okay. Thank you so much. Hope you see a lot of value on this video. If you do, please smash the like button and subscribe to my YouTube channel for those of you that have not done so. And finally, of course, subscribe to my network. Just click on my website below, drop your email into the form to subscribe to my weekly turnkey real estate investor newsletter. And so you receive great information out there you can apply for real. Okay, so thank you so much for listening. And I know I give you a lot of information, but hopefully this will inspire and motivate you to take action regardless of the real estate and economic conditions. Does that make sense? Thank you so much. This is Seewing Yee. I'll see you on the next video. Have a nice day. Bye-bye.